Hello everybody, and welcome to this special webinar on what we've called Trump's tariffs and the potential opportunities for traders in a protectionist environment, where countries may impose taxes upon each other, import taxes upon each other. My name is Sasha, and I'm a financial analyst from the research department at 4Trade, and I'm happy to have you watching. As always, if anything is unclear, please contact your senior account manager or leave a question, and I'll try to answer it at the end of the webinar. First off, please take a moment to read our risk warning. I'm sure that you know that although gains can be made trading CFDs, losses can be incurred too, and you need to be aware of this. Now we would like to present our offer that is exclusive to those watching this webinar. A special code will appear on your screen during the webinar, and I will repeat this special code at the end of the webinar that you can use to take advantage of our special offer. Be aware that this offer will expire in 24 hours and that this new offer applies to all of you, not just second-time depositors. So please stick around. It will be well worth it. If you make a deposit within the next 24 hours, you can receive a balance bonus. If you deposit 1,000 euros, you will receive a 2% balance bonus. Deposit 2,500 euros, you will receive a 4% balance bonus. Deposit 5,000 and receive a 5% balance bonus. Deposit from 5,001 to 15,000 euros and your overnight interest rate will be covered for 1 month. Deposit 15,001 to 25,000 and your overnight interest rate will be covered for 2 months. Deposit more than 25,000 and your interest rate will be covered for 3 months. You're free to use this bonus however you choose, but you might find it beneficial to use it on one of our market opportunities. Speaking of which, a market opportunity is a one-page briefing containing market analysis, and our goal is to provide you with a simple-to-understand opportunity to trade in the markets. We'll select an instrument such as gold or a currency pair and tell you our very best estimate on its price direction so that you can trade on it if you want to. Market opportunities are produced by the research department on a daily basis, according to market conditions. A market opportunity consists of fundamental analysis, geopolitical events, and technical analysis that includes a pivot point and support and resistance levels. So what you can see in front of you is an example of a market opportunity. Here you can see fundamental analysis on what's going on with the pound-dollar currency pair. Below, you can see some geopolitical events that can influence the currency pair. It's important to look at the pivot point on which the calculations are based. If the price reaches this level that you can see on the screen, which is encircled, this shows the right moment in our estimation to come in and open a trading position if you decide to trade on this market opportunity. You can see that this is a weekly market opportunity, although we also have regular daily trading opportunities. And you can see the uptrend. You can see the trend direction here, which is up. It's important that you know how to use the stop loss and take profit options. You have support and resistance levels here. At these points, you can put a stop loss and take profit. And further down, you have calculations. If you close the position using take profit, you can expect these kind of profits in green. If the price is going against you, you can potentially have a loss of this amount, support 1, 2, and 3, and that's in red. The pivot point is the starting price for opening a trading position. The support and resistance levels here are for daily, weekly, or monthly terms. Finally, profit and loss calculations are based on a one-lot trading volume. One of the platforms Donald Trump was elected upon was his America First policy. Trump stated that he wanted to bring jobs back to the United States and singled out countries like China as being to blame for lost jobs in the US industrial sector. This protectionist position of shielding domestic industry by imposing taxes on US imports put him in opposition to the concept of free trade. Most economists agree that protectionism encourages a response from other countries. And if tariffs escalate and a trade war begins, multiple sectors will suffer. And in the end, goods and services will become more expensive for all of us. Leaving the trade agreements and rearrangement of NAFTA, Trump has already shown he's willing to tear up trade agreements he believes are not favorable to U.S. interests. The Trans-Pacific Trade Agreement is one such example. The latest move of the U.S. president is tariff on steel and aluminium imports, which has been interpreted by some as a proclamation of a trade war. President Trump signed the order on Thursday, March the 8th. President Donald Trump said the U.S. would slap tariffs on steel and aluminium imports to protect national security, prompting threats of retaliation from Canada to China. Trump outlined tariffs of 25% on imported steel and 10% on aluminium for a very long period of time. On March the 8th, Trump stated that Canada and Mexico, who had protested the tariffs, would be exempted. Trump invoked national security issues as the reason to impose tariffs. Trump's administration claims that the cut-price metal imports hurt both American producers and national security, which raises the prospect of tit-for-tat curbs on American exports and higher prices for domestic exporters and consumers. While the practical impact may turn out to be limited, the political environment for global trade has just taken a turn for the worse. Europe has warned Donald Trump to expect retaliatory strikes against American icons like Harley-Davidson, Levi's jeans, Kentucky bourbon, and Florida orange juice if he sparks a trade war by going ahead with the punitive U.S. tariffs on foreign steel. The European Commissioner, President Jean-Claude Juncker, was highly critical, stating, "We can also do stupid," and warned that there will be consequences for the US if Trump's threat of a 25% tariff on steel and 10% on aluminium imports takes effect. If the Americans impose tariffs on steel and aluminium, then we must treat American products the same way, Juncker told German television stations. His warning came as the IMF stated that Donald Trump's plan would cause international damage and also harm America's economy. The import restrictions announced by the US president are likely to cause damage, not only outside the US, but also to the US economy itself, including its manufacturing and construction sectors, the IMF said. Other world leaders also threatened retaliation. Canadian Prime Minister Justin Trudeau said US tariffs would be absolutely unacceptable, and China too expressed grave concern over the plans. Earlier this week, the South Korean Finance Minister Dong Yeong said the country would deploy all possible means to respond to US tariffs, an unusually strong statement from a close US ally. Jerry Rice, spokesperson of the IMF, condemned the move, saying that the import restrictions would cause damage not only outside the US, but to the US economy, including its manufacturing and construction sectors. The prospect of a trade war between China and the US has increased after Beijing's foreign minister said it would make a necessary response in the event of Donald Trump introducing punitive tariffs. Comments on the 8th of March by China's foreign minister Wang Yi show that Beijing would not take the introduction of tariffs lying down. Wang said China and the United States did not have to be rivals, and history showed that trade wars were not the correct way to resolve problems. China would have to make a justified and necessary response, he said. Trump's tariff plan was a black day for the world, BHP announced. Rick Spooner of CMC Markets in Sydney said, even if there is a relatively favorable outcome on the detail of steel tariffs, the wider issue of the potential for broader tariffs aimed at China be a background concern for markets and a source of volatility over the coming months. President Trump has also faced opposition from within his own party. Notably, the Speaker of the House, Paul Ryan, is an opponent of the tariffs, although almost every politician agrees that cheap Chinese imports should be targeted. So, which sectors, countries, and companies will be influenced the most? So we have some winners and some losers to go through here. Foreign auto, tool, and machine part makers. Producers such as Nucor, AK Steel Holding, and US Steel will reap the benefits. They have aggressively lobbied for trade barriers against what they see as unfair competition from China, Russia, and South Korea. Shares in US Steel the day after President Trump signed the tariff order went up 5.8%. A tariff of 25% on steel and 10% on aluminium from all countries is expected to drive up US steel prices. The steel-making giant ArcelorMittal is also a major producer in the US and supplied building material for New York's One World Trade Center. It's long argued for trade barriers to protect its core markets, and tariffs would be a big positive for the company. US aluminium giants like Century Aluminum and Alcoa would charge higher prices immediately. Both companies saw their shares jump on Thursday following Trump's announcement. Some 90% of aluminium used in the US is imported, according to the US Commerce Department. Some foreign companies in this sector may decide to move operations out of the US and make their entire product abroad and then import it to get around tariffs and keep down costs. Companies that sell cars or microwaves would benefit from cheaper parts available from abroad due to the lack of tariffs. So, who would be the losers? Well, while China has long been the bogeyman of the steel industry and scorned by politicians for flooding the market with cheap products, it's not the biggest seller into the US. That title goes to Mexico, Canada, and Brazil. However, neighboring countries such as Mexico and Canada are set to be exempt from the tariffs. Global machinery companies and car makers. Steel-using industries in the US alone employ around 6.5 million Americans. Transport industries such as aircraft and cars make up 40% of US domestic steel consumption. Packaging and building construction industries are also affected. Companies in this sector will have to pay higher prices. US-based machinery brands like Caterpillar and Tariffs might face problems. Industrial firms with high sales outside the US, such as 3M and Boeing, could also be negatively impacted. This has been reflected in stock prices, with Boeing sliding on President Trump's announcement. Although huge companies like Boeing may hope for concessions from Trump to mitigate the effect upon the company, which is already trying to cut costs. Boeing could also suffer if the EU decides to target the company. Defense companies such as Lockheed Martin could also be affected. Global relationships. Other countries are also talking about the possibility of retaliation. In China, one of President Jinping's top economic advisors was dispatched to the US in an attempt to diffuse tensions. China is investigating US imports of sorghum and studying whether to restrict shipments of US soybeans. However, for all Trump's talk about China, the country only accounts for 2.2% of US steel and aluminium imports. As you can see from this table, which lists the countries that will suffer import taxes. Other countries that will hurt more than China include Brazil, Russia, and India, who are very unhappy at the planned tariffs. South Korea is another country that will be affected since it supplies 10% of US steel imports. The South Korean government, a close US ally, has openly criticized the policy, and US tariffs could complicate the potential thaw in the Korean peninsula at a crucial time when North Korean and US leaders are arranging a historic meeting. As we can see on this table, China is only the 11th largest exporter of steel to the US. And here is a list of the top 15 US exporters of aluminium that will be hit hardest by the new tariffs. Russia, the United Arab Emirates, and Argentina won't be pleased, but China is one of the top 5 aluminium exporters to the US. Shale gas producers are potentially among the losers. Steel and aluminium are needed for the long pipelines for oil fields planned to be built this and next year. More expensive raw materials to build these pipelines will make it difficult and might cause shale gas producers to reconsider building existing projects. Lower than anticipated shale production could then potentially support crude oil prices. It was reported on Monday that 8 oil and gas associations are urging the US administration to allow exemptions for energy project materials. A letter sent to Trump stated that pipeline projects could not go ahead if costs were too high, and that the end result might be higher prices for families at the gas pump. If US companies such as Levi's or Harley-Davidson are hit by a retaliatory tariff, making their goods more expensive for EU consumers, it could mean job losses for these companies. European steel producers. In the UK, some 20% of steel is imported by US markets. A tariff on the UK would be enough to threaten up to 6,000 jobs of steel workers in that country alone. Global car makers. President Trump has spoken how European car makers should relocate operations to the US. In the event of escalation or tit for tat between the EU and the US, Trump has threatened to put tariffs on foreign car makers. BMW, as the biggest exporter of vehicles to the US market, would be hit hard, as would similar companies such as Volkswagen that also export to the country. The stocks of many vehicle-producing companies in Germany, including BMW, Volkswagen, and Daimler, have been hit since Trump's announcement. Southeast Asian markets will also have to absorb the redirected steel flows. The global steel industry is such that when exports are blocked in one country, they end up shifting somewhere else. Shares of steelmakers JFE Holdings and Kobe Steel are already showing signs of stress. If the tariffs go through, the EU may decide to target US agriculture. Finally, global consumers. Tariffs make products more expensive, and if the tariffs turn into a full-blown trade war, prices on many goods will become more expensive, which would depress economic growth and potentially cause a recession. President Trump first announced the measures on Thursday, March the 1st. He followed up with a tweet on Friday stating that trade wars are good and easy to win. As you can see here, the markets disagreed, with the S&P 500 falling some 2.21%, although US steel shares climbed by around 6%. Global markets also fell upon the news. The following Thursday, March the 8th, Trump implemented the tariffs, while signaling that Canada and Mexico would be exempt from duties, and other allies may be exempt if they were willing to negotiate on other trading issues. But other major factors were in play, with the non-farm payrolls, unemployment rate, and average earnings releases on March the 9th. The markets were also lifted by the announcement that Trump would meet North Korean leader Kim Jong-un, offsetting any potential negative market reaction. So what can we expect in the future, and which currency pairs and stocks might be impacted? Well, currency markets welcome free trade, and individual currencies tend to go down in value when governments implement protectionist measures such as tariffs. In 2002, President George Bush introduced tariffs that impacted upon the dollar, which declined some 15%. The same thing happened under President Clinton in 2002 when he imposed tariffs. The dollar fell by around 15%. These estimates from TD Securities don't account for other factors that may have also had an impact on the dollar at the time. When the tariffs were originally announced, the dollar fell against a basket of other currencies and fell to a 2-year low against the yen. You can see how the euro-dollar grew here by 1.75%. The following Thursday, March the 8th, Trump implemented the tariffs, while signaling that Canada and Mexico would be exempt from the duties and other allies may be exempt if they are willing to negotiate on other trading issues. But other major factors were in play, with the non-farm payrolls, unemployment rate, and average earnings releases on March the 9th. The markets were also lifted by the announcement that Trump would meet North Korean leader Kim Jong-un, offsetting any potential negative market reaction. So we've covered stocks to some degree already. Stocks like Boeing, potentially German car makers such as BMW and Volkswagen, and manufacturing companies like 3M might be affected. Traders should be aware that these and other stocks in affected industries are more likely to be volatile. In the US, as stated, Levi's Jeans, Harley-Davidson, and companies in the manufacturing industry could be impacted if or when the European Union decides to respond with its own tariffs. However, if Trump makes concessions and the response from the EU is not answered with more tariffs, most stocks are unlikely to be affected. Global indices are now less concerned about a trade war since Trump stated he would create exceptions. But if the US fires back to an EU response with more tariffs, other than vehicle producers, we can't be certain which shares would be affected. In case you missed the promo code during the presentation, this is your opportunity to take advantage of our special offer, which will last 24 hours. The promo code is FTD1X. That's all for this webinar, and I hope you'll join us again at 4Trade soon.